Hey everybody, welcome back to Markets and Sectors. My name is Mike Fairbourn. It's great to be back with you. Take a look at the markets today. Well, we did have some announcements, obviously. CPI numbers came in a little bit lighter than expected in terms of core inflation. We're going to talk about that really, but a core portion, though, of our discussion today is really talking about giving you guys some tools and tools that I created on a code within thinkScript to help you kind of visualize the markets a little bit better as it ties in specifically to moving averages and moving averages crossovers specifically, putting what they refer to out there as moving average clouds, where you can visualize different aspects of the market and see different distances between those moving averages for signs of strength or weakness. So I'll look forward to going through that with you. And great to be with you here today. I'm here with my good friend Connie Hill, who is in the chat with us. And thank you, Connie, and welcome to each of you. We've got Ray here, David. We've got Ricebird. We've got Chris, Robert Boucher. Welcome to all of you. Life in the Fast Lane, Scott, Jay Richardson, Thea, Will, and others. Welcome. Well, let's do this. Let's start right into some disclosures here so we can get the show on the road so we start looking at some of these moving average clouds here. First off, I wanted to state that information here is provided for general information purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research. The paper money software application is for educational purposes only. Now, investing does involve risk, including for some products more than your initial investment. Futures and futures options trading services are provided by Charles Schwab, Forex LLC. Some additional information there listed below about Charles Schwab in that example as well. Now, a final note here, for the sake of simplicity, examples of this presentation do not take into consideration commission and other transaction fees. Okay. Well, with that, past performance is no security, is no guarantee of future results. And just some final notes. If we did tap into it today, we're looking at down below. We've got historical data. Should not be used when making investment decisions. The stacks is not a tradable index. The stacks should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. So having said that, let's go ahead and take a look at our markets here and get the show on the road. There is Intel. Gosh, I was looking at Intel. I sent a tweet out on Intel. Intel was part of it recently, and I'll tell you what, my gosh, their market cap was higher 20 years ago than it is now, probably 25 years ago, higher than it is now. Now, of course, you've got NVIDIA and others out there. Texas Instruments, another one. Although its market cap has grown over time, it too has not really held up in the semiconductor field relative to others. I just thought I'd bring that up. Little side note there. Semiconductors very disruptive, haven't they been over the last couple of years? Okay, let's do this. By the way, speaking of that, in terms of tweets, definitely give Connie and I a follow on X if you're up to it. Connie Hill CS or Mike Fairbourn CS. Would love to have you on board there. Where we do send out financially related and fundamental related tweets, as well as technical tweets too. All right, so with that, let's go ahead and take a look, broadly speaking, at our markets. Now, what I want to do too is, as we're talking about the markets and looking at this on a big picture perspective, we can see that major bounce over here. And what we talked about last week, I'm going to jump into the clouds in just a second here, the moving average clouds. But one of the things we did address last week was this ATR, the average true range, and what volatility was kind of showing us. I'm going to pull that up again right now. Let's go ahead and make it big enough so we can see this guy. Let's see. Now we'll darken it a little bit too against that black background. We'll go to a 3 and let's just see how that's been unfolding. So volatility is still climbing higher. Very, very interesting as prices are going up. I did see something kind of fascinating this week. I wasn't able to get like an image of it to use yet or all the documentation behind it, but I wanted to highlight something that I had been finding around presidential elections. And that is, and you can see when that the election occurred right there. Well, that was the, let's see, it was over here, wasn't it? I apologize. I had the wrong date. It was actually over here in November. Was it here? I think it was. Well, you get the post-election bump right after it, but then just prior to inauguration, over here, looking at the 20th of January, 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 20 Might have had that off previously, but yeah. So you got the election here, and then the inauguration over here. It's actually fulfilling a kind of an interesting pattern, and that pattern is you do tend to historically get prices might be coming up to it, dip a little bit, and then the bounce. It doesn't have to be as high as it was here, but then you'll get some consolidation up until about the 20th, and you might generally be down to sideways, and then you might start a recovery up. Now, oftentimes the year following an election can be a strong year. It doesn't have to be in every case, but it also does follow a seasonal perspective too. So I'm just curious. There's a lot of different areas to look at when we're talking about seasonal seasonal numbers and how it might tie into presidential elections. But it's kind of fulfilling that a little bit. Today's announcement was a little bit different. I mean, I should say today's move was a little bit different than what I was actually looking at or referring to previously. In fact, the CPI that came out, those numbers, did post that on my X as well. If you want to see what I've got the actual numbers on there. You may or may not want to, but here it is in case you do. CPI. Now, the CPI itself did come in lighter than expected. The core inflation. So it slowed to 3.2%. Okay. And that was less than expected. Okay. We also saw like transportation services, that one gained a little bit, but there was much to offset a lot of the inflation that we'd seen previously. In fact, that cooler core inflation kind of renewed maybe some bets for the Fed on does it change the rate cut dynamic? It very well, it's interesting just to see what could happen there as well. So just to keep that in mind, those were some big numbers today, and that really, I think, accounts for the significant move to the upside. Finally, last point before we move into those clouds real quick is you can see over here we talked about the ATR and what it can mean when you do see a big spike in volatility going higher. We're using the ATR for that specifically. Generally speaking, that ATR, if we are to really kind of move to the upside, what may happen is volatility might begin to compress a little bit. It might start to shrink a little bit. Just generally speaking, uh, markets will tend to, when they dip to the downside, you might have heard this old line that they might crash to the downside, but then they might take the stairs to the upside or take the window down or whatever the case is and the stairs up. It really oftentimes is true, and you'll find just historically, when you see these upward moves in the market, you just get a sense that volatility is coming down. So I was just watching this here. I know we had a pretty big move today in terms of that true range bar. Just looking at today's bar itself, measuring the true range is about 52. As you can see, as it stands right now. But will that begin to kind of fade a little bit and come back down? There was a little bit of a point here in terms of volatility over here to the far right. We got close to this 80 range, and we began to just kind of slow down. You can see in that curve too. It's just going very, very slow. It's not like one of these where we're just spiking. Last time when we did this, we had this dip to the downside, but notice we took that little extra leg lower and then we spiked. If we take a look at that level there, and that lines up to about this point, look where we're at. So we're still basically right there. If I take this last little dip that we had in terms of volatility and compare that into the future, that volatility kind of measures the same level we're at right now. Will it spike higher? If we did, we're probably looking at a downward move. But if you start to curve over, volatility can maybe give us some of our first hints to maybe a move to the upside as well. Okay, so with that, I'm going to just go ahead and minimize that for now. And I want to talk about big picture market and look at some of the markets as well as the sectors using some of the moving average crossovers with the script that I've kind of put in place here to use for us going forward. In this class, I'm going to talk a little bit about it in the thinkScript class as well this week, but I've got something else to discuss there as well. But as we look at it, it is the moving average cloud. I just named it MA cloud because you can add clouds, which was fascinating. You can do that. I'm going to go ahead and put this back on. I've set this up just so you know it's for crossovers. It's got a color-coded basis to it. And I've set up right now one of the key crossovers that traders, investors will look for in the markets. And that crossover can be connected to the golden cross or the death cross. And that is the 50-period moving average and the 200 day. Now, I've set these up in a fashion where you can put actually on this chart a weekly time frame too. Even though you're looking at the daily chart, do you want to put a weekly moving average on here that you can actually see on the daily? This script will do it for you. That's really, really helpful. Now, I'm going to reference the weekly today anyways. I'll just show you the weeklies in this fashion just so you can see it. The other thing I did is I included down here below some different moving averages you can use. Because one of those that is used on a bit of a short-term basis is an exponential. Not the one I'm looking at here, it's an exponential. So I've got that one. I've actually included the whole as well. Now I could add it, I think there might be another one I can add in there, but I hit the three key ones. I think there's a geometric moving average too. I saw that, I didn't add it in, but there you go. I got a long plot, short plot, and I've got it colored in red and green to kind of match exactly what we're seeing on our candles over here. Let's go ahead and test it out right now. I want to explain how this can be utilized. Let's go ahead and just shoot that in right now. Okay, so you can see the range, and this just represents that crossover time frame. And for example, this is the golden cross. How are we doing? You know, we're looking at a 50 period and a 200 period. I'm on a 2-year chart. I'm not out all the way. We got to cross like right over here. We got a 50 period. This is a simple. This is the way we've set it up. It's a simple period moving average. Simple 50, simple 200. Okay, is the golden cross there. And we have that. Now the death cross would be a flip to the other direction. All right, let me show you this on a 1 year. We're going to take a look at other sector charts here too. Oh, that's not going to be our 1 year. It's going to be right over there. Okay, so clearly really showing some strength with the trend. I think it's an indication of overall strength. One key note on this is when the distance within that cloud, you start to see these ranges in here. And you'll notice over here, you get a very, very wide range between the two. And we've been holding that general range. And what I'm referring to is this distance here, up top, really down to the bottom here. You're holding that very, very close, very, very sharp. And that is oftentimes an indication of the strength of the trend, just because you've got that 50 moving average pulling ahead of the 200, which is a ways down here, right? We're right at the 50 actually right now, and we have spent some time above it. The cloud can help us kind of get a visual grasp of this. I think it can be helpful because we're going to be looking at a lot of charts here in this class too. You know, each and every week we do this. One other key point is that you can look over here and look at also, you know, we're right at the 50 period moving average. We're at the top of that cloud. Notice that once you get above the cloud, obviously the strongest range is going to be is when you're close to that level and then you're starting to bounce off it. You know, you've gone above the cloud and now you're testing the top of the cloud. You've gone above the cloud and now you're testing the top of that cloud. We've kind of been in the upper sort of band of that cloud, if I could say that right there. But we're on the verge right now, although we're not quite there. We got to say we're on the verge because, my gosh, we're almost peeking through the clouds, right? Just barely getting above. Will we get above that? That remains to be seen, but it can act as a form of somewhat resistance when you're in the cloud, or kind of turbulence until you break up above it. And then you can act as support. And that could be a positive if, in fact, prices go over here. And that is the question. Will that happen, right? That's the question. So I wanted to pull that up and look at this. I want to pull up and look at a few of these right now. Let me do this too while I've got you. I'm going to go ahead and just share this so that you all have it here. And you can plug this in. And again, you can just save it in your charts. I've thrown it out here for you. You can change the colors too. If you want, I can adjust this so that we can change the colors of the cloud itself. I'm going to go ahead and just throw this into the chat box so you've got it right there. But I'll just put this MA. This is how I've got it kind of titled MA Cloud, and boom, there you got it. Okay, so you can copy that, put that in, utilize that going forward. I'm using it against the black. It kind of shows up a little bit easier against the black background. NDX. How are we doing there? What did we just barely do? We just barely crept above the top of that cloud. We just broke through that cloud cover. Just barely. Now, will we hold it? It remains to be seen, but the same thing holds true, and it can give us a general sense where we could be testing this upper range and then breaking out. I've got a little bit of a mild trend line coming down here as well. I can actually draw that not at the 2-4 trend line, but maybe off the top here. Still not above that trend line, but that could be construed by a lot of traders as a positive getting above that level. Now, by the way, we've got 45 minutes left in the day, so we're not closed yet. So it remains to be seen. But a lot of times, if you can get above there, it might show some strength, particularly as we're looking at the golden cross. We're just using the upper channel as that golden cross previously. This was a long-term golden cross, right? When we crossed, my gosh, this whole thing is shaded in, right? We got it there. Look over here with me too. A test down. Was it a longer term pullback? Yes. We kind of made it down to about midway of the cloud. Key point. We didn't make it to the bottom of the cloud here. We made it about to the upper portion of the cloud, maybe the upper third before breaking out. You broke out here and you can watch this kind of that test down to it, fire back up. So all else equal, it is looking very, very interesting here. A lot of traders might say that is a positive. Perhaps, okay? Obviously, it remains what remains is, it could be positive if it continues to go higher, but that's sort of an earlier indication of the trend. You know, when you're below the 50 and you get above the 50 and the trend is up, which we're getting here, you know, something fascinating is you're not quite to the bottom, but you're getting some confirmation of a move here. Maybe a bit of a confirmatory bounce. This held kind of tight, so we broke back up above it. We've still been holding close to the 50, but there's been a little bit of confirmation down here. We've had a few closes in a row to the upside, right? Off the bottom here, we rallied up, and it appears, we're not done yet, but it appears we're going to get a close above the high of the low day and could be going further. Okay. Now, I want to do something else because I want to adjust this right on the fly and show you how quick we can do this now with these clouds. You just pop in here. I've made it as simple as possible. I'm going to choose another one that a lot of traders will use on a short-term basis. It's the 921 crossover. It's very, very common. And I'm going to show you this on an exponential basis. So now you can do this all in here inside the indicator without having to go up and start to make additional sort of changes to it within here, multiple changes, etc., whatever the case might be. All right, so let's pull that one up right now, and we'll compare this on a larger scale. It's going to adjust very quickly. Now, this is on a short-term basis. So this is how some traders might perceive it. Let's talk about it. Okay, big picture, we're going to tie two in together here as we look at this, and then we'll break down some other components of the market. But it's just so fascinating because we're hitting these levels right now. We're just touching the 50. We're breaking through the 50 here on the NDX, just barely getting to that point on the SPX. But the NASDAQ, a little bit there already. Now, can you see over here where some of the strength has occurred? And you can see how resilient some of these points are. Look at this over here, folks. Just follow me over here at this point. Right there, boom. You follow it up, you come very close to testing it right there. That's why they like the exponential. It can turn quick. The exponential moving average puts more weight on the more recent data. What's the more recent data? Well, if you're looking at the 9, you're looking at, okay, so you got over here. It's a 9 period. It's going back 9 bars. 1, 2, 3, 4, 5, 6, 7, 8, 9. It puts the emphasis on this more recent range of data and less emphasis over here. So we'll go this. We'll say a more of a less approach, more minus over here, and more plus over here, which means that if we're coming down and we're testing right there, you see that bounce right there that you're getting? The 9 is going to be very sharp, and it will not knock you out. It gives the market a chance to confirm, and boy, did it confirm. We've held in. I'm just going to color it in for you. There we go. Just pull out the old crayon. There we go. There we go. Right here, color, color, color. We're going to pull this back, 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 back. It's all colored. It's all colored. It says right there, okay, it's coming on down a little bit. It said there could be a little bit of a dip. There was, but we could be on the verge of the 9 in green crossing above, back above the 21. EXP. P, the exponential. And that's what we'd be seeing here. And then we wouldn't be getting the red cloud. The red cloud. We'd be getting the green cloud. So let's look at it from this perspective. We just looked at one over here. That other one was clearly, the golden cross was long term. Okay. Golden cross. I'm just going to put gold. Golden. Golden cross. The golden cross was a little bit long term. This, which is a shorter term trade, I don't know if there's an actual term for it, but I just know that it's used for kind of like a swing trade time frame. So I'm just going to use that for now. On the swing, it's going to be short term. So why not just marry the two together? When we have the long term, the golden cross up, and it's a key word, that's a key point, and the swing up, that's when maybe we could look at saying, hey, now the market is giving us a little bit more confirmation that it might be more closer and ready to get going. Okay, it might be close. I mean, some people might say, hey, maybe there's a way to take a portion of the trade in over here. Maybe they say, well, half of what I was going to trade over here, but if I get the other half over here, or some might just want to wait to take the full trade over here when they're getting both confirmations. But it's a really cool way to get a double kind of a confirmation that traders might like to use. I mean, when I say confirmation, it's a potential confirmation in the market, right? We're looking to see if it will unfold, but traders can look for this as a confirmation of these moves coming off the bottom. Will it swing? Will the swing trade start to break out and go higher? Hopefully I've given you some ideas on this and a quick way to maybe utilize this going forward with this MA cloud indicator. But it is in the group. Okay, yeah, and you get the holes in there. See, somebody had mentioned the holes, and I said, we've got to include the holes. Okay, good. Okay, good. Yeah, so this is coming from a topic request, and yeah, it's just faster, and it's just easier, and there's a lot you can gain with different distances between the two. Now, I'm going to step back here and say for some of you, and I know you're out there, especially in this class right here, because many of you are like me too. I do look at longer term trades. I mean, a lot of the trades that I might personally look at, I'm just broadly speaking on a big picture perspective, might be 3 to 6 months out in time. Okay. They're not like, how can I say this? Always just incredibly short term. Now, sometimes I think the swing trades are just like, given certain market conditions, just the place that got to be in a lot of cases. People just say, yeah, you're just looking for the moves, and that makes a lot of sense. But also, I don't want to miss the longer term. And what if I set a 5-year weekly chart over here? Now I just flipped it to a weekly, okay, and I'm going to go ahead and oh, hang on a second. Yeah, it's got to stick with the daily until I flip it into the channel. Let me just show you this though right now. I've got this pulled up. We can go weekly, but let me draw in a different one that I look at on the weekly as opposed to a crossover. Although we could do a crossover on the weekly. We've got the capability, the capacity to do it. Let's just throw the simple moving average for now. And I'm just going to show you this. A simple moving average 30 is a very common one that I think a lot of traders have used. I've certainly looked at it myself on a weekly chart. It's just a straight 30-period moving average. Okay. Now, a lot of times if you can hold above it, this is on a weekly basis, but you can see over here, the reason why I want to throw this out, without a crossover for now, just make it nice and simple. Look over here and see what you got. There's your crossover there. Touch, 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 breakdown. Entry point, possible entry here. If somebody was just utilizing this, that puts us all the way over here. Potential exit point, breaking below it, right there. That price action was covered. This is a weekly. This is not a daily. This is a weekly, and you can see over here, well, that's actually a 1 year. So isn't it nice to have a reference on a chart and saying the trend is up over a time frame? There's just a lot in there. This is just one that I've looked at over the years. I know sometimes people will gravitate towards one of the, definitely other people are going to gravitate towards others. But that's like another 9 months. So it's like a year, 9 months, getting close to a 2 year mark. That's a fairly large run. It's a long-term reference point, but it is around the 30. That's what I've used here just solely. That's all I wanted to do. That's it. All right. And you can use the same thing over here. SPX, boom. You see any reference points on the 30? A little bit of a test down here, but you'll notice what? We didn't close below it, did we? We kind of bounced off it right here. And here we are. This is just what I wanted to bring up. We're right down to that level where oftentimes you can bounce or stay just above it. Just like we'd seen before, that upper cloud cover, just holding above that range. Weekly, 30. I looked at this years ago, and it's one that I've always just kind of used and stuck to. I'm going to take it off now. There's a 30 there. We've got reference points in other places to look at. But folks, that was an overview. You have the code. By the way, for those of you that are not able to attend live, I will have that for you in the description section under YouTube. And just click on more. It'll be down there. You can just copy that link and create this so you can have access to this MA Cloud thing. All right, Cloud script. Okay, let's go over here. I want to take a look at our overview, but I want to look at some of the grids first in terms of our sectors. I always like to come over here and I like to detach this so we can see it big picture. I want to show you a key crossover here that could be interesting too, using our MA Cloud. We can put it right on these charts as well because we have the capability to do it. But say, for example, if we're looking over here, communication services have been very strong. Look at what's been starting to move a little bit. Financials had an interesting day. Materials coming off the bottom. But look at energy. I mean, that's really been quite strong with crude being where it's at. But let's focus on some of like even some of the stronger points over here. Let me see if I can show you some bull flags, possible bull flags. Bull flag, question mark, right here. How about over here? This is kind of a long, kind of a drawn out, sort of a little mini flag right there in tech. Maybe one of the weakest bull flags, if it is one at all. But then over here, I think might be the strongest out of the whole group. You guys tell me if you can see anything else out there. A lot of these, I don't know. The trend is down. And when the trend is down, look at this healthcare. Whoa, weak recovery right there too. That's more like a bearish flag. Because why? Well, the trend is down. Even though it might look like a flag, that's not in the direction of the trend. Uptrend here. Let's put it down. Just clearly uptrend, uptrend, uptrend. And maybe the strongest communication services. I'll clear this off real quick so we can take a look at it. There's your jump up, and we've done nothing but just go sideways. So we've really held our ground there. Let's dive into that real quick using the scan tab under communication services and just see what's been lifting this up a little bit. Scan tab. It's just great to use these tools on Thinkorswim. I still have it up. We did it last week, but here you go. S&P 500, which is what we're in. You got to be in the stock hacker. 500 communication services. And I selected that by going down to industry off to the right here and just going to industry right over there. Where are you? I'm sorry, industry, communication services. Boom, I've selected it all. Click on it. What do we have? We've got 22 in there. What's really been moving over the last month or 3 months? What's been moving really over the last week? You can click on this, but I think 3 months is a good time frame because that 3 month does a pretty good job of being mirrored over here. If we were to look at this on a 3 month, in fact, I'm going to maximize that grid. We're going to take a look at this. If we're going back 3 months, interesting, right? Do you think it might include a bull flag in here? I mean, 3 months is a good time frame to maybe do that as we're looking specifically at S&P 500 companies. Maybe those that might have better liquidity situations right in there. What do we have moving here? Well, this one is huge. I mean, WBD, was that a buyout? WBD? Hang on. I've got a detached one I use. By the way, anytime you have this, just detach it. Make sure it's not linked and you're good to go. I'm going to go back to my charts. We'll keep that one detached. And I'm going to just jump over here to my my daily 30-50, and I'm going to highlight this for you as we take a look at it. Let's do, yeah, WBD. Okay. No, I don't. I think it started with earnings. There's probably some news behind it. Anticipated negative earnings. It came in positive earnings. The market had a huge bounce. That's a pretty sharp sell-off. Not sure all the details. It's not really a stock I track too much. Google, though. Google, clearly. Netflix is in there. You got Take-Two Interactive. Look at the last 3 months. You got Meta is in there as well. Let's just look at a couple of these just to give us a general view. I looked at this class yesterday in our swing trade classes. We talked about it specifically with the possibility of a cup and handle pattern. It's doing a pretty good job of unfolding to the upside today with a lot of the market. We'll see what happens going forward, but it's up about 6 points right there. And it did have earnings over here, but you can see over here, yeah, let's look at it. There's some strength coming in with earnings and maybe even breaking above this longer term resistance level over here. I'm sorry, earnings kind of got us going over here, but there you go. There's some strength with Google. What else did we have over here? We had Netflix, NFLX. Tesla's in one of these, are doing well. That might be actually a K hold when it closes. It's not a K hold now. So just to confirm, and I want to make sure everybody's clear on this, this is not a close above the high of the low day yet, because yeah, we've got 30 minutes left in the day. And you've got to close above the high of the low bar, which we have not done. So this could signify something interesting. I'm going to zoom in on it right now. Could this get going? The industry looks interesting. A lot of it's going to have to do with the follow through. But look over here. Low day, low day, low day, low day, low, 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 low. You never broke above the high of the low day. You never closed above the high of the low day until today, question mark. Hasn't happened yet, but we're just not there yet. We've got less than a half hour to go, so we'll see if you get a K hold. It's not a guarantee it's going to bounce. I'm just saying, my gosh, it's been a while. Looks like the parabolic SAR I've drawn in there, Connie. And there you got it. Okay. Oh yeah, Thea, did you get that script or not? Oh, the one I've got is not a scan; it's just a visual. Although we could create a scan just looking at the chats there. Let's go ahead and pull this in right there. Yeah. So a lot of times, Kenneth, to your point and others, if you get that bounce right there, if you close above there, oftentimes it can be the start of the move. Check it out. Test it for yourself. Get the pullback and just see. Did you close above the high? No, no, no. I mean, look at that. You traded above the high. Where'd you close? Below, 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 below. Still didn't do it even there. Where'd you get it? Right there. Close above the high of the low day. And it can be, some traders will look at it for that very reason as a start of a move. I just want to let you know, because some of these in this group do look interesting as we're taking it down to another level. I hope you guys are okay with me doing that in this class. Normally I talk about markets and sectors, but if you get some groups that are getting K holds that they haven't seen for a while, or cup and handle patterns, whatever the case is, and it's happening in one sector, sometimes we might dive in a little bit deeper. Let me know though if if you're okay with that, because I realize this class we just generally hit markets and sectors. But if something sticks out, and I'm looking at this pretty frequently because it's one of the 3 classes I teach, and so I thought I'd throw it out there to you guys. But yeah, Meta, by the way, pretty strong. You can see the breakout over here. It broke out a little bit higher. And one quick note on Meta over here. Take a look at this. Higher low, higher low, higher low. Now, sometimes if you get that higher low, higher low, higher low, it might put you in a better position to actually take out resistance right there. If you can, question mark. But the reason is we're getting a little bit of an indication of the shorter term trend, the shorter. I'm making a habit today of just keep spelling stuff out. I keep getting myself stuck saying that. But the shorter term trend, at least you're getting the higher lows. And that can position us for the possibility of a resistance break. So maybe a couple key three of them in there. I'm going to jump back to this chart because I did want to throw out here for us. I'm going to go ahead and add in that MA underscore is how I've got it. Yeah, the one I've set up here. But I'm going to put this in here for now. You can get a pretty good sense that it's going to be definitely above, it's going to be acting quite well in terms of a golden cross. But how about the shorter term that we looked at? That'd be the 9 and the 21. Okay, let's choose that again. That's an exponential historically that traders and swing traders will use on this. But is it giving us part 2 of our entry on this? How close are we to it? Oof. Did it ever break down? See the strength of it? This is what we're talking about when we're looking at strength on top of strength. Long-term strength, the longer-term crossover, check. Shorter term, 9 and 21, did we ever cross lower? When was the last time? This is one of the benefits of just sticking with the stronger trend that some traders will say. Trends can always change. But now we go shorter term. Folks, it never even crossed lower below that 921. Where was the actual entry? Now, keep in mind, long term, yeah, we were still up, but right there. Let me just draw this and make sure. Let's just fill in the cloud and see where we're at. We came very, very close, but sometimes when you get close, you might be due for a bounce. And it just so happens we're in a possible bull flag scenario here with, yeah, it was all covered. You like my crayon? Terrible job. But I'm just showing you, hey, we filled that in. It's in there. And look at this. It's right there with the possibility of K-hold. Do you guys recognize this other indication over here on the chart, by the way? Anything else you see? What is that candlestick pattern? It's close to it. It might not be like an obvious one, but you're actually getting a candlestick pattern here, which might be a further indication. It's not a guarantee. None of these are guarantees, but it's just an addition of something else where there might be a further expectation of the possibility of a move. Anybody recognize it? What is that? Absolutely, Chris, there's a hammer in there. There's also one that's got a 3. I got to redraw this. You're right, though. And it's made up of that. You're definitely getting a hammer there, aren't you, Chris? Yeah. The body of this, the length of the wick is more than twice the size of the body of the candle. And so by definition, Chris, you nailed it. That is a hammer. And it is kind of towards the bottom, but yeah, it could have been a spinning top. Yeah, I'd say, kind of towards the other end, Luke. Yeah, good call. 3 soldiers. Yeah, a lot of times those soldiers, I'm looking at the 3 soldiers, they might be down like 1, 2, 3. Anyways, this is what, yeah, you can see that too. Like here, there's a 3 soldier down. Bounce. You don't know. It's a sideways channel. It's very tricky to see, but it's a morning star. The morning star candle, which is it's part of a flag pattern. This whole thing here is the possibility of a flag pattern, right? And the strongest sector in the S&P 500 right now. But the morning star is this. I'm going to try to draw this out the best I can because it's happening in the sector specifically. A lot of times, and this was actually a positive. You open lower, you closed higher, but I just want to show it to you. You get the downward candle. Oh, gosh, I got to draw these thinner. Takes forever to draw them out. Okay, and then you'll oftentimes get sometimes a doji at the bottom, a reversal down here, and then you get the follow through to the upside. And a lot of times traders are just looking for one more confirmation bounce, but it's really kind of a test of the bottom. So left, middle, right, bam, will it go? That's the question. You're getting that too. This is all happening within that same sector. So it's interesting, but we did not, just using our MA cloud, we did not get that bounce either. We did not get it to break down. Last note on the cloud as we look at the sector here. Come over here and take a look at this with me, folks. We've come over here, and I just wanted to highlight this for you. Notice that when you get the crossover, acceleration of the trend could be occurring when the expansion of that cloud begins to widen a little bit. Okay. That type of thing. Now, for some traders, they might be waiting for the crossover to exit. as a potential exit signal. But that's where that short term can be helpful. And you can see that on some of these stronger trends. That's where that 921 just might make the most sense, is one way to say it. It's just, you put it on the stronger trend, and then you can use that as an entry or a potential entry, potential exit, as some traders could use. I mean, that's what they might look for. But you got the cloud on top of it, hopefully easier to visualize there. Now, next point. We had to do one other quick note because we do go through our market and sectors. I do kind of like a pinpoint approach to a lot of these areas because a lot of information behind the market, behind the sector that we talked about today with that additional script. But just a couple of quick notes too as we review this. We're kind of going to wrap this up now. But remember when we said you go below the 100? We did it again actually, and then on the McClellan oscillator, and then you get above the minus 70. Well, Mr. Tom McClellan says that's 2 to 3 weeks of a potential rally. 2 to 3 weeks. So there could be a follow through here, too. We just got that right there. We don't know if that'll happen, but that could be encouraging. One of the main points I wanted to mention here on the summation index is you're just barely starting to move off those lows. Do you see it just barely creeping higher here? Also, advancers and decliners. I think one of the last points I want to make on this screen over here is this. Look at the advancers and decliners. Do you see, the markets aren't closed again, but advancers are just starting to take out these last two highs. But yet, it's a little bit of a positive divergence here. Let me show it to you. We're making lower highs here on the SPX. But as we take a look at the broader indice here, it's got about 2.800 and change stocks within it, much bigger on the NYSE, but we're actually taking out these highs. That is what's referred to as a positive, folks, a positive divergence. And the advanced decline line can be a leading indicator there. Just keep that in mind. All right, folks. Well, one last note on the SPX EW. Can we break above this range and kind of hold? That might be the short-term level as we're looking at the equal weight in the S&P. So keep eyes on this, but trend still intact, folks. And it's a higher low still. I know we dipped, but we did not make a lower high and a lower low just yet. Now that could occur down here below 7,000. So something we talked about last week, but a good solid move today. Definitely great for the bulls. We'll see see if it can last. There's a lot of volatility as we talked about initially with that ATR, but hey, it's great to be with you all today, folks. Again, we talked about the moving average cloud. You all have that script now. Again, I mentioned I put it in the description section under more for those of you that are viewing this on the archive. But I just want to make sure you guys have that. Give you some little tips and tricks to use, some quick ways to adjust, simple, exponential, and whole. There's a variety of those that you guys use in different time frames that each of you like to use that work for you. And that's the whole idea here. But we talked about the concept of kind of combining a long-term crossover plus and having a short-term crossover that traders might use for a confirmatory. They might use an approach like that because they might think that the expectations are higher now. We talked about breaking down we talked about breaking down the sectors, and then we actually went down all the way to the stocks, just to kind of highlight how that had been strong and had been holding on one of the quicker clouds, the 921 exponential. So we broke that down, and then we took a look at maybe some of the indications in terms of the advanced decline line. We talked about this time of the year with charts too. They might have a tendency to maybe rally after inauguration. That has happened from time to time. We're in that time frame of the year where seasonally speaking, January and February tend to be fairly bullish on average. Not a guarantee. Things can change every year, but that's also another indication too with seasonality. But on that note, thank you so much, Connie, for your help in the chat. Folks, remember, you can subscribe to our Trader Talks channel. Bottom right-hand corner of the screen. If you do that, it's so easy to do. Just click on subscribe. We have over 135,000 subscribers right now. I'd love to have you on board. Folks, if you like today's presentation, smash that like button. It does help. It helps, literally forces that YouTube algorithm to keep this content coming up more frequently for you, for our channel. And so on that note, everybody have a fantastic rest of the day. See you next time.